Peter Mcguire is joining us. He's CEO at XM Australia. Peter, very good morning to you from where we are. Pleasure as always to speak with you. What are you making of the kind of conflagration we've seen between Iran and Israel from a market's perspective? And I'm not talking about the war itself or the geopolitics of it, but from a market's perspective, how much of a concern is that Iran's crude supplies or entire oil machinery will get hit?
Well, good morning, Tamana. I think we've been down this pathway before, and this really creates much angst from a supply side if there was to be an attack on those Iranian fields. We all understand geographically where they're positioned in the Strait of Hormuz on the Persian Gulf and the impact that that would have to shipping and, of course, all the crude that flows through that region. So this would derail, in a lot of ways, a lot of crude being exported globally. So there's the first part. And the second part is a war premium would be quickly built into price, and that could add $5, $10, $20, depends on the severity of it, very, very quickly, if not more.
Right. Peter, morning. There were some reports over Tuesday and Wednesday as well, but there was some speculation with respect to OPEC going ahead and increasing production going ahead. Of course, since then, we've had certain stories being rebutted. And this was a Wall Street Journal story being rebutted by the OPEC. There was still speculation that oil prices could potentially go down to $50 a barrel. That looks unlikely, yes?
Well, again, I'd have to say good morning. I think a couple of things. First off, if you've got these, there are two very different processes in play. You've got, if you strip out the war and there was nothing happening and you were going to increase production, you would think that prices would fall in value. But now you've got a war premium that could be built in and escalating, and you've got major conflict across that Mideast basin. So that creates uncertainty, and uncertainty is not what the markets like. The markets want certainty. So these are all factors that are going to, I think, unwrap themselves over the next matter of days.
To understand, the impact that Iran has on global crude supplies, the war and the uncertainty there, of course, remains. But the fact is that Iran is not such a huge supplier by itself, and the fact that there's a glut. Do you think that tempers down expectations to some extent, or tempers down at least the impact of this war on crude prices?
Well, Tamana, it depends if there was a severe strike on the actual oil refineries and the whole Iranian oil, the complex pipelines and everything that goes into the production of oil. So there's the first part. So if they were to take out their infrastructure, that would create much angst, because naturally, are there going to be their counterparts or their allies coming to their support? And then the next part of it is what happens as far as distribution through the Persian Gulf. So, these are factors that can quickly escalate, and we've just got to see how severe that particular process or scenario was to play out. This is all unknown because this is going to be into the future, and we've just got to sit here and see what the retaliatory action is going to be from Israel.
Moving on to, well, I'm going to talk about metals in this case, because we've actually seen a lot of policy traction with respect to what China is doing there. And because of that, we've actually seen a little bit of resurgence in metal prices as well. How are you reading into things here?
Well, again, I mean, you've got copper now through 10,000 a metric ton. It's bounced very strongly to the upside. So is aluminium, nickel, tin, zinc. So all of them have had a really nice rally, and it's on the back naturally of that China stimulus. And are we going to see that ongoing? I mean, the stock market has been mind-blowing, which you've seen for the performance in September, and certainly over the last week and a half across the Chinese equity markets. So if this is going to be the pathway forward, and you're going to see continued uplift and really a concentrated effort from a stimulus perspective as far as China's concerned, then that's a good sign, because but you naturally need to see consumption out the other side. That's global consumption. So again, it's early days, but at the moment, it's been a market that many traders have enjoyed terrifically in the sense of base metals and that quite bullish move to the upside.
All right, thank you so much for that, Peter Mcguire there. And, a lot of uncertainty out there, but remember that the kind of impact we will see from the Iran-Israel conflict, at least on crude prices, will be limited because of the huge glut in supply. And also we'll have to wait and see. I think what the market is waiting to see is what exactly is the shape and form of Israel's retaliation.